So for this video today, we're going to be going over break-in structure and kind of what it is, how we can implement it, why is it important, and what can we use with it, what can it provide information for us on the charts. So we'll go over real quick what is break-in structure. Break-in structure is when there is a complete, notice complete candle closure above or below a previous high or low. So notice how there is a complete closure of the candle, and that's kind of like why we're going over this right now is we already talked about candles, the wicks, the bodies, we talked about highs and lows, and we can implement that directly into break structure, right? That both those things kind of apply the same thing. You need to understand both of them to understand this, so it's a great way to put it. Um, why is it important? It can kind of show us initial change in the market, right? We can see, obviously, with higher time frames, hold higher power. So a 1 minute break of structure will never be as strong as an hourly or 4 hour break of structure. It can also provide daily bias, right? If we get a break of structure on the daily candle, right, we're thinking we should trade in that direction. And it can also help us with executions on entering a trade, but we won't worry about that too much till farther down the line. Obviously, we're only learning kind of the building blocks of trading, and it's not really doing anything for us for when it comes to executing on trades, right? So how we can find these in the charts. So first of all, we have to mark out some highs, we have to mark out some lows. So here is a phenomenal example of a break structure to the upside. So this is on the hourly time frame, so obviously a much stronger draw here. So we have this high right here. I'll mark it out in green so I can mark out a high. So you have this high here. We have a low here. Never really got any movement down in this zone here, but we can see right here that we got a candle close above this high. So the highs and lows, sometimes a high won't even include a wick, right? Sometimes there's not even a wick there, but majority of the time there is. Like this is a high. But for a break of structure to happen, this candle completely has to close. And I'll kind of show a drawing here of an example. So if we have a high right here, and this is a up candle or a down candle. So let's say this is a down candle right here. It's going down in that direction. And then right next to it, we have another candle. And this is the high right here, of course, right? But the candle next to it looks like this, but the wick goes way up, right? And this could be an up candle, right? This is going in the up direction. Now, is this considered a breakup structure? No, it's not because this candle did not close above it. Now, what it did form was a new high. So, did form a new high. And if the next candle right here closes like I just showed in the last kind of example in the chart, like this is a complete breakup structure to the upside. Now, obviously, the opposite is true for a low. So, like right here, great example. We have a good low to mark out right here, right? And then we get a complete closure below this. I'll get rid of these ones right here. We get a complete closure below it. What did price do? Continue to move down. Now, is price going to look like this on the smaller time frames? No, because like I said, the higher time frames hold higher power. So this can also kind of help with daily bias and finding our trades. So we've talked about trends, we've talked about highs and lows, and we've talked about fair value gaps, but I probably shouldn't have done the fair value gap one until later. But I might just remake that video, honestly. But uh, with breakup structure, can kind of show us where bias is going to go, right? So if we go on a daily time frame for over here, and like I said, we could have, a good high here, right? So we have a high right here, and we get a closure above that high. Where do we think price is going to go? It's going to continue in that direction, right? So we have a really nice high marked out here. Put that in green. Price closes completely above it, and we continue to move up. So there are some pretty good examples of like non-breakup structures, right? So obviously, like right here, you could say this could be a high. What did price do? It swept this high, but it didn't close above it, right? So this is not a breakup structure to the upside. That would be a good example of what not a breakup structure is. So what can also help is not just showing examples of what a breakup structure is, but what it isn't. So knowing exactly what not to look for, right? Or when you do see it, you know automatically like this isn't a breakup structure. So a good example is like down here, we have this low. Let's say the next candle formed like tomorrow or whatever, the daily candle for Monday closes like this. That is a breakup structure to the downside, as long as it's a red candle, right? If it's a green candle, it's not really, but a green candle really isn't going to look like this. So this is our red candle. It's going down in that direction. It's continuing to move that way. That is a complete breakup structure to the downside. So that is kind of what it is. And like I said, it can help with bias, right? We see a breakup structure here to the upside on this candle right here, right? It didn't happen. This is also a good example of what not a breakup structure is. So if we mark out right here, or actually it is, sorry. So this is the daily candle, right? So we get a complete closure above. Price did move up a little bit, but not quite as strong as versus like right here. We have a high here, we get a closure above, we get a slight retrace and continue to move up. So if we scale down to like the hourly time frame, I'm sure we can scale over and see, bam, right here. Right here, we got that closure above, continues to move up. There's that small retracement back down, continue to rally up. So that kind of helps with, obviously this is a New York session, so if you kind of mark that area, you get this closure above, price rallied up a little bit more, you'd have to go on smaller time frames. So doing a recap of what breakup structure is. So helps us identify a few things. So it helps us identify break in structure, helps with the following: daily bias, when to enter a trade, but don't worry about that. Don't worry about this right now. Helps with showing direction of market and shows shift in trend, right? If there's a downtrend and we get a breakup structure to the upside, is there always, you know, means we're going to continue to move up and you're like, oh my god, we see a breakup structure, I got to enter long short? No, that's not the case, especially on these smaller time frames. Like we can see a ton of examples of this on the 1 minute time frame. Like the 1 minute time frame, sometimes I'll enter off a breakup structure on the 1 minute, but I have so many more confluences that it does make sense to enter. So like right here, we have actually some pretty good examples right here. So obviously we're in a big downtrend right here, right? We see this high get formed right here. We get a closure above. Price did rally up a little bit, kept moving up, and then fell to the floor, right? So it's not the strongest confluence, especially on the smaller time frames, but on the larger time frames, it can help us get a little bit of confluence and a little bit of bias towards where we want price to go for the day. So that's it for breakup structure. I'll do another video on going a little bit more in depth on how to enter trades with it. But again, we aren't just going to be entering off of like fair value gaps and breakup structure.